Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler with another episode of That Annuity Show. And I want to welcome our my regular co-host, Will Moorcroft. Will, good morning.
Morning. Great to be here.
Mark, welcome. And
Thank you, Paul. Good morning.
Hopefully get your computer back and we get you off the iPhone, from next time. And Ramsey, thanks for doing this. And you've got a special guest for us. Do you want to do the honors of the introduction here?
Good morning, Paul. As always, it's great to be here. So we've got a great opportunity today. My good friend Angus Shillington is joining us. He's a member of the emerging markets equity team at a New York-based asset manager. And he and I spent a lot of time talking about a number of things, but one of the things that is always struck me is what he tells me he sees in the financial services space in different parts of the world. And so as we think about this podcast, I think we have this amazing opportunity to talk about issues that agents and advisors deal with locally in their business day to day, but also bring them a broader, more macro and global perspective. And so having Angus on today is a terrific opportunity. So with that, Angus, I'm going to turn it over to you to tell us and the audience a little bit about yourself.
I'm Angus Shillington. I work with I'm in the investment team, and I cannot talk about specific investments we have, so let me make that disclaimer, and I can't make any Van Eck related opinions. These are all my opinions from my experience over time, so hopefully that will be helpful. But I grew up in the UK. I moved east for the whole of my life, first to Hong Kong, investing in Hong Kong Chinese, Greater China markets, then to Los Angeles, some trading, some sales, and then into New York in derivatives and cash sales and trading with risk management at the end. I work with a pretty talented group of people here and invest in EM. And what's been incredible, I think, over the last, call it 10 years, is we've dropped in technologies into EM that took 40 to 50 years in the US to be dropped in. And these are, from microchip through internet, through smartphone, 5G and after. And the business models that have clustered around those initial technologies have looked very different to ours. They're very much digitally driven. They're very much platform driven. And once you've built up a customer acquisition funnel that is pretty sticky, clustered around, think Amazon Prime, think Netflix, and you're not going to lose those customers. The next stage is you build up a customer base that is entirely penetration of your country. So think giant, think 750, 800 million people in China, or 800, 900 million people in India. You can start to do some kind of interesting stuff. I think that would be my first point, is what I've seen in EM is the creation of trusted fintech brands, and trusted brands is a very important part of this, that are able to transact digitally across multiple products and strategies with very, very large amounts of people, with very scaled up businesses, with incredibly low cost bases. And then you sort of think about the opposite, which is where we are right now. And we think the trusted brands have had real difficulty, I was speaking to Paul before the call, in converting their businesses from more analog to digital. And a lot of that problem is in the ability for consumers to change the way they think. And I think that's probably an intro, and I'd love you guys to drill down what you think would be interesting.
All right. So I think one of the things that we're trying to get a handle on is that, so you brought up a very important point, that there's there's a certain level of friction, and that we have existing systems in place here. What do you think it will take to make things change here? And one, and then two, do you think there are any lessons to be had for us as an industry, and those who work in this industry, whether they're in distribution or otherwise?
Yeah, it's a great question. So, I mean, let's put on one side a catalyst. I think what we're going through now is an obvious catalyst to be able to source and transact in a remote location. I mean, that's just obvious. And I think that's going to be a big catalyst to start with. And I sort of think about, I mean, let's sort of go slightly off piece. I sort of think about healthcare. You know, I've got a bunch of kids, and if one gets sick, my wife would prefer to call the doctor, get put on hold for 20 minutes, get an appointment at a time that doesn't suit her, travel there, wait in the waiting room, catch another. I mean, you know what I mean? I'm talking about rather than transact that digitally, because really at the end of the day, the doctor is just a giant algorithm who's probably read the same books as most other doctors. They're going to diagnose you the same way. I think that's it. But I think what it boils down to is really sort of decomposing the word disruption and trying to understand what disruption is, how meaningful it is. And to me, in its broadest and simplest format, disruption is offering a better outcome to consumers in a format that's cheaper. And I think that's available to us right now. And you know, some of the bigger problems we've had is it's legacy thought and legacy, I guess, management, and this whole idea that we're so used to in the financial service industry of confirmation bias. If it worked yesterday, surely it's going to work tomorrow. Mm-hmm. So the trusted brands in the US don't seem to be, and again, I'm not an expert here in any way, don't seem to have been disrupted right now, and I think may have been slower to identify the opportunity set going forward in terms of building digital relationships with clients that offer huge value in terms of customization, in terms of proprietary data analytics, in terms of simplicity of onboarding, the ability to communicate with your customer, the ability to gather data around your customer and allow your customer to participate in the business. So, what I always think about in sort of terms of analog versus digital business models are digital business models feel like more of a partnership because of the customization piece, because you've built a platform that's fed with proprietary analytics that allows you to treat the customer as a customer. It allows you to start to do, some of the sort of simple, internet specific skills of, as I said, easy onboarding and rewards and helping with time management and creating sort of micro tribes and behaviors, customization, curation. All of this stuff is possible because it's driven more by the consumer than it is by the sales guy.
Yeah, well, look. There's so many different ways to take this conversation, because we're obviously our business is just been hit by an asteroid, right, Mark? I mean, it's astonishing. Like when I think of what the business looked like in February versus what it looks like today, Angus, no surprise, it's utterly different. One of my favorite quotes is the future is already here. It's just unevenly distributed. That was by a science fiction writer, maybe 20 years ago, right? And true here. So, gosh, can I sell a product in insurance business remotely to a customer and get them to sign it digitally and send it back to me? Yeah, we've had that for 20 years, right? Oh, now we actually have to do it. Right. We tried paying them. We tried giving them, bonuses. We tried all sorts of things. You couldn't get the adoption. Now we finally now you have to. There's no choice. Angus, I just wonder, like, if I'm sort of trying to get my head around how long it takes for a society to sort of say, look, oh God, I'm trying to think of the movie where something falls from the sky and the natives pick the phone up. How long does it take when you look at some of these emerging economies? How long does it take for one of these technologies to really actually change the fabric of the economy? And I'm thinking right back to our business to say, how long will it take for us to really see agents do business differently?
I mean, honestly, I think it's consumer trends. And I think it has to be. And again, it's back to this partnership proposition. Is there a way to have a conversation that says, the outcomes could be better, or we could have more consistent communication, or I can educate you. And I think that, this podcast is a good example of, I'm going to give you this for nothing. In return, I'd like you to listen to me. I'd like you to understand that changes are coming, and we've learned in the last couple of months that Amazon can keep it going. I mean, they have an undisruptible, by and large, infrastructure that allows them to service their customers. And I think it's really that's where the change really needs. I think it's obviously a two-way street, but the provider in developing, and now we're dropping into greenfield, and they're connecting with people that never connected with a doctor digitally or a financial service consultant digitally or analog. So this is their first, so you don't have to disrupt that mindset, but the mindset needs to be disrupted on both sides. It's very clear that the visionary management, and when you've seen an analog business add a digital piece, call it Disney. I mean, it took a lot longer, and that was very much a case of the guy, the recency bias, telling the guy who ran the business. And again, it's a terrible example, but what I'm trying to say is that the transition between analog management to digital management, it takes some time. And again, it's understanding that changing something that worked yesterday is the future. And while we haven't had to do that in our countries in developing, it's very clear that the scale, the cost advantages, again, the customization, but the partnership proposition to the underlying client and customer is dramatically better.
Mark, how many agents have you talked to in the last couple of weeks? What's their perspective? Is it, how do I change my business, or how do I survive until everything goes back to the world I knew?
It's interesting. It's kind of both. There's different mindsets, and it even goes right up to the distributors that we work with. Most of the distributors that I'm talking to, their business is down as of April, 30 to 50%. And what's interesting is, a lot of their training and education now that they're doing for their agents is not at all product based. It's how do you do business remotely? How do you do a Zoom meeting? How do you engage with clients? And what's really interesting is, to your comment earlier, we've had EAP out for years, and now we're seeing, a good trend upwards. So over the last year, we saw some movement with EAP. Now we're almost at 60% EAP, which, is great. And I think that efficiency is going to continue to grow as we move forward, that people are getting more comfortable about it. But there was almost two sets of challenges in terms of making this transition. And the first is getting the agent comfortable with doing it. And now, a month and a half into it, the feedback that I'm starting to get is the next challenge is getting a client comfortable with it. A lot of times they're trying to do remote meetings like on a Zoom or a WebEx, and clients are not comfortable with the technology in terms of doing that. They'd rather do a telephone call. So I think that's going to continue to evolve. I think people, as you commented earlier, you're really forced into it now with what's going on with the pandemic. And I think it's going to make a big change in the industry going forward.
Maybe Angus, we could talk about sort of unintended consequences. So for instance, and Ramsey knows this, my daughter actually spent a year in Morocco. She had a fellowship, worked for a nonprofit, an NGO that had implemented some really basic technologies called fog catchers. I'd never heard of this thing before, but water vapor hits solid objects, it actually condenses and turns into water. Well, what if we put up big nets and in areas in the desert where you have lots of fog, no water?
Right.
Okay, great. People don't have to, now the women don't have to climb down 2,000 feet to get the river and take the water up. So now what was she doing is, well, now all the women are out of work. How do we retrain them? They don't know math. They don't, the culture doesn't like this. So I guess, how do we think through the ripple changes? As Mark says, here you have, marketing organizations that were absolutely focused on separating this product writer from, the surrender charges of the MVA calculation on that particular product, where they're now having to worry about lights and camera and angles and teaching people. Any rules you see in these emerging technology, and what are the second, third order changes? Are there any good examples of how this ripples through an economy?
Yeah, I think the broadest answer to the question is, if you can increase everybody's selling power, right, which is really what you're doing. You're saying you can increase everybody's addressable market, because instead of driving in a 40-mile radius and capturing everything around you, they can go anywhere. So, you know, a guy who's got a customer on the East Coast can make recommendations to the West Coast, or there are various ways to source new customers. But at the end of the day, what it leads to is the survival of the best. So I think it's, and again, financial services seem to me in the US, and I've been in developed countries, is very, very focused on cutting costs, and maybe less focused on creating optimized outcomes for consumers. There's a chance. I mean, the pie could grow in every direction. That it could get deeper relationships, more relationships. If you're able to communicate more swiftly, more efficiently. I mean, one of the crazy things about sort of financial services is, and a lot of the distribution type challenges are this issue of single touch, right? If you turn up to somebody and you sit in their kitchen one day and you say, this is what you should be doing, right? And they had a bad night's sleep, and maybe the stock they invested in a week before is down 40%, they're less likely to make that investment. Now, if your relationship is more cumulative, evolves over time, and that's multiple value-added pieces of literature. That's multiple. It's back to this sort of partnership proposition that I think it seems to be from the experience I've had, that if you build your relationship digitally and you can become conversant or shake hands with your underlying customer digitally, then the more cumulative effect of being able to teach them to take care of their financial health with a specific set of tools makes that relationship much more interactive. It doesn't feel like selling. It feels like resource.
That's a very interesting observation, because as I think about a number of your comments over the course of this show, earlier you were talking about what it means to be a trusted brand in each of these various places. So in the US, the trusted brands are virtually all analog. In some of these other countries, these developing countries, the trusted brands sounds like they're more digital. It's more sort of digital. They're more digitally native. And then you sort of tie it in with what you just said about this notion that in an analog world, you may only get one bite at the apple. So there's a lot of pressure, tension built into that one sort of interaction, versus a digital cultivation. I think where you're again, a digital cultivation over time, particularly with new audiences. I mean, if I think about the insurance industry in the U.S., I think that ironically we're undersold. It's a sales-driven business, and that people go out and they talk to clients, et cetera. But I think that the United States is undercovered in life insurance products, whether it is mortality products like life insurance, or if it's annuities. I think that we're a nation that is, writ large is undercovered. So I really think there's a very interesting opportunity here with digital to expand the pie to new audiences, and to your point, to cultivate a relationship over time and have a number of interactions, and not have everything come down to one meeting over a kitchen table. And I think that's pretty powerful. I think we lost your sound.
Mute. Angus, you're on mute.
So yeah, I mean, I would throw it back to your guys. I mean, the one X factor that seems to change everything in terms of customer understanding is transparency. And I mean, how do you guys think about transparency and the ability to perhaps use that as a tool, becoming more transparent, use that as a tool to build customer trust?
That's a good one for you, Will. Right?
Yeah, there's been a lot of great opportunities to chime in on this on today's episode, but I think that and I was thinking a little bit about when you mentioned Amazon, and how Amazon is really immune to the current situation to a certain extent, and how that relates to the financial services, and more particularly to insurance. And I agree with you on the transparency issue. but going back to something you mentioned that I wanted to touch on, the fact that this current situation is a catalyst. It absolutely is a catalyst, and it is forcing, by necessity, financial service professionals to reevaluate how they traditionally did their business. So it's challenging the status quo out of necessity. And what I was thinking about is, how do we parlay this experience and and build upon it as financial services professionals. Your point about transparency is spot on, but the more I think about it, there's folks that you already mentioned it, Angus, that I don't have to limit my the area that I'm marketing or selling into to a certain geographic area. I can sell on the West Coast, from the East Coast. I can do a whole host of things. And the other thing that you said that struck me is, those that succeed at this, those that adapt and evolve, companies and individual producers or agents, will be the ones that survive. So I think that maybe it's a little bit, maybe we have to figure out that recipe for transparency in a digital age. We talk a lot about, from a sales perspective, how important it is to connect, to build relationships, and to foster those relationships, and so that we're not just a fully transactional based business. So I agree with you 100%. Coming from a sales role in my past life, that transparency is critical. I think that the relationships are critical, and I think we're going to figure it out together, how we take the environment that we've been living in for the last 50 days, thereabouts, and charge ahead with that.
It's really interesting. I was going to say, it's really interesting in terms of that dynamic, because a big part of the marketing that a lot of the agents do out in the field is through client seminars, and those are not obviously taking place currently, and that's a big part of it. They could happen in the way that a lot of industries are doing it, like in the way that we're doing this. Yeah, and there's one group that did a pilot. One of our marketing companies did a pilot, doing almost wedding style invitations like you would to a client seminar, but it was for an online seminar with a link in it. So the link, and a passcode, the client would log in, watch a video presentation of the seminar, and the response rate was about 0.5%. They did 10,000 mailings, but to your point, you can do it. It's more efficient from a time standpoint. You're not traveling around. You're not paying for the cost of a venue for a seminar. And I think that's going to continue to become, more and more, the wave of the future in terms of. I think that the strong survive. A friend of mine's a curator at a museum, small museum in Connecticut, and they did they had a fundraiser, a murder mystery. They did it on Facebook. They would have never thought of this. They made several $1,000s. They had people participate across the country. They never would have had that happen. Obviously, logistically, someone had to come up with the idea and someone had to run with it. But they had a fundraiser, and they did it in a way that they never would have anticipated, 6-8 months ago.
I mean, you all touch on kind of a very similar thing again, which we've sort of seen very different, or I've seen very different in emerging. Is this, if your total addressable market is not limited to like an analog type distribution model, whatever your radius is, or whatever you can start to sort of not only restructure the cost structure of your business, talking to the issues of being able to bring some of the fixed costs down and distribution costs down. You can also start to reorientate, and again, I've seen this in a lot of models in emerging. You start to be able to reorientate your sales guys towards more segmental type sales. So say one guy, okay, you've got pan-national doctors, right? And he figures out a way, or he thinks about how to add value to that specific group of people. And instead of cutting it up by zip code, you're cutting it up by customer type that you intend to add value to and partner up with. And again, it just becomes an easier way to think about, that proposition of, hi, my name's Angus, I cover doctors. We've become very good at X, Y, and Z, and would like to have a conversation. Sounds so much better than, a cold call or a cold referral. I'm a friend of a friend. Again, I think when you open up your total addressable market to this sort of survival of the best, the partnership proposition does come up very clearly, that it has to be about the best outcome, not the sales guy's best outcome. Does that make sense?
It's you think what does the model look like there? Now, if you think about financial services, what's my biggest differentiator from other advisors? Historically and still today, it's my zip code.
Totally.
My zip code happens to be closer to your zip code, and I'm saying the very same thing. I think it's going to make it more, the opportunity to specialize and be an expert in certain areas is going to change dramatically, because again, you say the market could be the entire country as opposed to, one county in New York. I think now the other flip side of transparency, Angus, is interesting from our business is, yes, we can make this we can't hide our products. We can't obfuscate what they are. Obviously we wouldn't do that. It's against the law. Now with digital, with websites and people working online, we can make our much more transparent how these products work and what the options are. Flip side, from a behavioral science perspective, is the more we tell people and educate them, the more they may be unlikely to actually just take a simple action and do something. So, I mean, I don't know what your thoughts are in terms of, if you've given me, if you're managing a huge portfolio for me, how much do you tell me, right? Versus not, to have me end up with an optimal decision or action. I don't know. What are your thoughts?
But again, I think that's sort of down to the behavioral issue and the sort of recency bias issue that, you have to change. It's difficult to do. And I vaguely understand the way that sort of the advisor RIA model works. I guess you just have to figure out how to change the cost structure and explain that again in a way that helps your underlying client, understand that you're trying to create a partnership. You're trying to create success for him, success for her, or success for you. I think it's less of a case of, and again, I've seen this sort of go through countries like wildfire. It's not a case of defending yourself against inevitable change. It's making sure you know where inevitable change is going to be and trying to optimize to that point. So I don't know if there's an easy answer to that, but I think it's more of a mindset than anything else.
Well, I think no, we're not obviously, directly in the asset management business, but I could see a day not too far off where you're paying me to give me your, assets, right, to manage. Are you now, and I'm saying you as an advisor, are you really am I paying you for psychology, or am I paying you for, managing my money? I don't know. How will this change the RIA space in your?
Yeah, I don't think it'll ever not be a human piece of this. Naturally, there just has to be. There has to be a handshake at some point. How does it change the RIA space? That's a really tough one. I don't. The guys who are doing the best jobs, who are getting the best outcomes, I guess, will always be the ones who end up ahead. And switching costs are one of those sort of dark holes that nobody really ever talks about, right? Because the idea is to get them as high as possible. You must be able. I guess sooner or later you figure out how to disrupt that barrier, because really in a more digital world, the idea of moats, or the idea of moats as you knew them has changed. It's switching costs come down. Visionary thought processes will sort of overwhelm defensive thought processes. And it's very difficult to get away with sort of average behavior, because everything becomes transparent, and the guys who are winning play that leaderboard game, which has become so huge in the digital world from social media onwards, that it's possible to get your successes out there. So I guess it's not a great answer, but it's not really my thing. But that would seem, just from the pure mindset of understanding that digital disruption is inevitable everywhere because, the simple, if you have large amounts of proprietary data, you can get better outcomes. If you have stickier customer relationships, better coming out from, optimized outcomes, you will win. I mean, you will build scale, and the three of those together mean that's probably where the winners are.
So, I mean, it's interesting if I think about, like, Paul, your comment there, I trying to sort of come up with an analogy. It's sort of like, say you were buying a car, and maybe in 2020, you want a lot more information about the car than you might have wanted or had available to you 10 or 15, 20 years ago. But there's a limit. Like, it's one thing to know, what the seats are made of. It's another thing to go into the physics of the internal combustion engine. So the question is, like, what is the optimal point of transparency versus sort of information overload? And now I can see a world where we can determine where that line is for people much better in a digital context than trying to do it as individual humans. So there's no easy answer to that, but it from my perspective, like, technology will get us a better solution than trying to do it the old-fashioned way.
Yeah. Well, let me just ask you, Angus, final question for you, just very macro, which is, wow, in the last 3 months, have we seen how closely connected this world is, right? And what the supply chain is, where things get manufactured, what happens when it gets shut down. On the other hand, we've seen this massive closing of borders, massive discussion around supply chain risk, et cetera. Is this at the end of the day, is this going to change, in your view, the macro economy, our relationship with emerging markets, or is just the economics and the nature of technology and trade going to just sort of keep going the way it is?
That's a great question. It's difficult to change, is my answer. Look, there are 350 million people in the US, and they consume and devour a lot of stuff that comes out of China. There's also another sort of 7.3 billion people in the rest of the world. The European community is the biggest consumer of Chinese products. The supply chains that are set up by big US corporations in China, so Nike or Apple, they're not built necessarily to serve the US. They're built to serve the world, and there's no reason why that should change dramatically over time. Are the two sort of pieces I've sort of optimized toward, but the one I think is kind of critical is that China works, right? That supply chain works really well. It's fully automated, it's paid for, right? So if you're going to put it somebody else to pay for it. So it's a balance sheet issue for an Apple or a Nike. I don't know what the outcome is, but what I'm hearing from most of the conversations we're having is that it's a sort of China plus solution, and that plus is probably the US. But the idea that they sort of go out and build it tomorrow doesn't also make any sense. So it doesn't seem to come out in the macro data that these supply chains are unwinding. But what's probably going to happen is, if Apple grows its business by 20% in the US, maybe it adds that 20% in the US. So the idea that supply chains can unravel really quickly. And now we're talking about Chinese entrepreneurs who run businesses that face the US. Now, they've had 18 months to reorientate their thought process towards risk, and have probably pivoted away from the US somewhat. So it's difficult to say, but it's not a sort of huge sucking sound from our opinion. There are a lot of, from my opinion, there's a lot of sort of bigger stuff going on. I don't know if that's a good answer or bad answer, but certainly the data, and I was talking to some hotel people, US hotel people who have resourced in China. They're saying it's coming up pretty quickly, and gave some very specific numbers around that feel reasonably comforting. So to separate the sort of supply chain piece, which is a relatively smaller part of the Chinese GDP now, certainly that faces the US, from the sort of consumption piece, it feels okay.
Fascinating.
All right. Are we any other questions? Any thoughts, Will, Mark?
No, Angus, a lot of food for thought today, and appreciate your insights. It's a great and unique perspective for us. to contemplate as we, as we generally gear this show towards insurance or financial professionals to try to give them things to think about in their practice. And obviously today's discussion really shows that that folks are going to need a way to potentially differentiate themselves in this marketplace. So really appreciate your thoughts and you coming on the podcast.
Yeah,
Thanks,
Mark.
guys, for inviting me.
Yeah, Mark.
Yeah, no, thank you, Angus, as well. I mean, I think certainly the very timely discussion as we're navigating through the pandemic and the change that we're seeing in the industry right now. I think is going to continue to evolve, and I think this is just the beginning of this whole disruption in terms of our industry.
Yeah.
So Angus, yeah, thank you so much for joining us today. Very much appreciate it. Very unique and informed perspective. And I think that the things you had to say were going to be very valuable for our audience. So thanks again.
Yeah. Hey, thank you. And thanks to all of you for listening to our show, and join us again next week for another episode of That Annuity Show. Thanks, everybody.
Thanks, Paul.
Thank you. Thanks.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.